In this video, we are going to talk about everything you need to know if you've considered buying a home. This is the ultimate buyer's guide, and although I am located in Connecticut, the overwhelming majority of info in this guide will apply to markets all across the US. This video will be broken down into 4 segments. Number 1, understanding the market. Number 2, walking you through the actual purchase process from beginning to end. 3, the costs associated with buying a home. And 4, the 5 things that you need to know throughout the process. I have also included timestamps in this video, so if there's one specific thing that you want to learn about or understand more of, you can go in the description and jump around to that portion of the video. Now, before we go any further, you may be wondering, who is this guy and how is he about to tell me how I'm going to buy a home? Well, my name is Wesley Krombel, and I am a licensed real estate broker in the state of Connecticut, where I run a team in the central and southern part of the state. We've become one of the go-to teams in our market, and we are incredibly passionate about helping people buy and sell real estate. And no one deserves a harder working realtor than you do. And by the way, if I can ask one favor, if you find value in this video, please hit that like button and make sure that you subscribe so you won't miss more of my content that is to come. It's important to understand that there are many moving parts to a real estate transaction, and not every transaction is the same. I say this because many of the scenarios or examples I give in this video will not be the only potential outcome. So I will do my best to try and cover all potential scenarios as I go along. This video is strictly intended to help home buyers have a more successful and positive experience throughout what can be misconstrued as an overwhelming process. Buying a home is about building equity, being financially smart, and loving where you live. It is still the American dream. Understanding the market. Why should I work with a realtor? Months of supply, and when is it a good time to buy? Prior to buying a home, it's important to understand the market conditions. I believe in being educated about the market because in turn, it's going to better prepare you for the process and eliminate the stressful surprises that could arise throughout your purchase. I also strongly recommend working with a licensed and experienced realtor who can help guide you through the market. Now, it's easy to watch me say this and label it as me being biased, but here's why most sensible people use a realtor. Finding homes for you, explaining the sale process, negotiating on your behalf to get the best deal possible, referring you to other strong industry professionals who are involved on the transaction, advising on every step of the transaction. The list is rather long, and I can only make this video so long, but here are another 90 ways realtors are there to help you and why you'd be crazy not to use one. So a common question I hear a lot is, when is the right time to buy? Well, if I'm being totally honest, the correct answer is when you are ready. Now, you may also be wondering, what does feeling ready even feel like? Do you need a home? Do you feel the need that you need to go and purchase a home, or are you tired of renting? Do you need to get your own place? If the answer is yes to that, my next question to you is, are you pre-approved? And if you are pre-approved, my third question becomes, are you comfortable with the estimated monthly payments that you are being estimated from a lender towards property in your market that you would be looking to purchase? If your answer is yes to all of those questions, it is the right time to buy. It's also important to know about months of supply. This is a metric that we use in the industry to gauge if it's a buyer's market, seller's market, or a balanced market. Now, typically, if we look at a graph here, a balanced market usually has 5 to 6 months of supply. Lately, since COVID days, we have been looking at a much heavy leaning seller's market based on low supply, and there just being still a ton of buyers in the market. So it's important to understand what kind of market you're getting into. Is it competitive for buyers? Is it easy for buyers to walk in if it's a buyer's market and there's an overload of inventory? This is great to know about your market as you're looking to purchase a home, and is crucial to setting the stage for what to expect during that buying process. So fantastic, you've now determined that you are ready to buy a home. You might be wondering now, where do I start from here? Well, first things first, let's get you pre-approved with a lender. The reason this is so important is because having that pre-approval shows the proof that you can financially purchase that property. The other reason is you now know exactly what you can purchase. We need to determine what your financial capability is, along with making sure that your monthly payments are comfortable. Now, I do want to differentiate the difference between a pre-qualification and a pre-approval. There's an important difference here, and you may have heard both terms. A pre-qualification is simply a buyer having a verbal conversation with a lender and saying, this is approximately what I make. This is my approximate income. This is my approximate credit score. This is my approximate debt. These are yet to be confirmed with physical papers and statements and tax documents. This is a pre-qualification where a lender says, if you are justifying what you are telling me is correct, I can give you this pre-qualification. Now, a pre-approval is looking over and proving that all of those verbal statements made by the buyer are actually true. Looking at your tax forms, looking at your income, having a credit check done. This is the difference between pre-qualification and pre-approval. Pre-approval will always be a stronger pre-approval than a pre-qualification. Now let's talk about down payments. And this is another common term and question I get of how much do I need or how much should I put down when purchasing a property? And ultimately, this is going to be a question for you to have with the lender based on where you have your financial status of the amount of money you can put towards a purchase, and also what qualifications you can get into certain programs that may vary the down payment you have. Now, I can just say right off the bat, the whole 20% down to purchase a property is not true. You can purchase a house with less than 20% down. But the one differentiator that I will make with 20% down is that you will avoid PMI, which is private mortgage insurance. So if you are putting less than 20% down, other than a few varying and specialty loan types, you can expect to pay private mortgage insurance, which just gets tacked on to your mortgage payment. If you are putting 20% down or more, you do not have PMI. Now, the last thing I will note here about PMI, other than the fact that this is really a conversation to be had with a lender, is that FHA financing has PMI for the life of the loan. So with a conventional financed loan, when you get to 20%, your PMI goes away. With FHA, it does not. You will have to refinance to get out of that PMI payment. So pre-approvals, let's say you get that pre-approval from the lender. You know what you can purchase up to, you know approximate monthly estimations of what your mortgage payments will look like. How long does my pre-approval last for? It depends, but pre-approvals normally last for 30, 60, or sometimes in cases of 90 days. Now I want to tell you what I, as a realtor, am going to be doing for you when you have that pre-approval. Now there's a lot of conversation that we're going to have, a lot of education that I want to make sure that you're aware of to once again make sure that the process is as smooth and successful for you as possible. When it comes to looking for homes, one of my big things is I never want you to miss an opportunity. So I am going to make sure that you see and get every home that is within the criteria that you are hoping for based on location and specs of that house. In addition to this, I am constantly always prospecting for new inventory. I sometimes get inventory myself that I can list or bring to clients that allows additional inventory besides just waiting for stuff to come on the market listed by other realtors. So let's fast forward and say we have the pre-approval, we've been walking through properties, we now have gone to one that you love and want to submit an offer on. Awesome. This is where things get really exciting. Going over the whole offer process is really intended for a whole separate video, so keep an eye on my channel for something further down the road. There are a few terms that I want to go over that you may hear when writing up an offer. The first one is mortgage contingency date. This is an important part of the contract. This date is before the closing date. So throughout the contract, you are going through the loan process to get mortgage commitment. and you need to do so within that mortgage contingency timeline. So when it comes time to write that offer, I'm speaking with your lender and saying, look, give me as strong and quick of a timeline that you could meet, but is also strong enough for the buyer to be strong to that seller on paper. So we will get into where in the process that falls when I get into the purchase process itself in the next segment, but I just want to clarify what the mortgage contingency is. We talk about closing date. Of course, this one speaks for itself. This is the date in the contract that, of course, is talking about the day that you sign, transfer money, and you get keys in hand. Another term I want to talk about is the inspection period. Super important part of the contract. This is a negotiable amount of time. Typically in our market, we see 7, 10, maybe 12, 14 days long. And this is the length of time right at the beginning of the contract that you are allowed to go into that home and do an independent inspection of every and anything you want to do, including things like the septic system, the well water, things like electrical, plumbing, structural damage. The way that inspectors pick apart a home is practically disgusting, and I mean that in the best way possible. Another term that I want to discuss is the deposit amount. This is earnest money deposit that upon an accepted offer, you are giving to the listing side in many cases, and that money is held in escrow. That money is there in good faith to say, look, you've accepted my offer, I'm going to be putting a deposit down on that house. Now, I want to make it clear that, once again, there is no exact amount that people are putting as a deposit. In many cases, I'm seeing anywhere from 2, 3, 4, 5+% of the purchase price that you are putting down as your initial deposit. It's important to remember that the deposit amount goes towards your down payment. So in a hypothetical scenario, if you have a $100,000 down payment and you put a $10,000 deposit amount at the beginning of that accepted offer, you now only have $90,000 more that is needed to complete your $100,000 down payment. The last term I want to get into is appraisal gap. Now, this is a term that has been common in the recent market due to the competition with buyers and the lack of inventory. An appraisal gap is quite literally what it sounds like. It is covering the gap between the appraisal and the purchase price. Now, for the most part, properties in most cases appraise out, meaning that purchase price that that buyer is trying to buy it for is what the appraiser also agrees that it's worth. And the reason the appraiser is even out there in the first place is to verify that that lender that is about to give you that money is actually going to verify that you're paying a fair amount for the property. Now back to appraisal gaps. So in a hypothetical situation, let's say that you are trying to purchase a house for $400,000. That appraiser comes out halfway through the deal and says, well, wait a minute, I'm only giving it a value of $390,000. Suddenly you have a $10,000 gap. And there are 3 scenarios that can unfold here. Scenario 1 is the buyer just says, I'm walking away. I'm not going to pay this because it's not worth what I'm telling I'm going to pay for. Option 2 is you can just choose to pay it. And this would, in many cases, be covering the appraisal gap. Option 3 would be to start a potential negotiation with that seller in hopes that both parties could come to some sort of negotiated agreement. So again, the reason that an appraisal gap is now used in offers is to show that seller that they are willing to be a stronger buyer by paying that much more money over appraisal price if it happens to come in low. Now let's step into segment 2, which I want to get specifically into the purchasing process and the timeline of what that process looks like after going under contract. Now, generally speaking, typically a financed offer in our market takes about 30 to 40 days to close from the day that your offer is accepted to the day that you are signing for those keys and getting them in hand. Now, the first thing that you'll receive once you get your offer accepted is a phone call from me with a congratulations backed by a ton of excitement. Right off the bat, I am waiting for that executed contract to be sent to me after the seller has signed. From there, I am sending that contract to the lender and eventually to your attorney. And just want to clarify that in the state of Connecticut, you legally need an attorney to close on a real estate transaction of any kind. This is not the case for all states across the US. When your offer is accepted, you have in the state of Connecticut 72 hours to get that initial deposit to the list side or to the escrow to be held for the deal. Once we have those things moving, we need to work on getting an inspector lined up for your inspection. I never would advise or expect you to buy a house without an inspection. Usually the first few days of an accepted offer can feel a bit hectic. There's a lot of loan documents moving around that you're being sent. There is the inspection being lined up. There's the deposit amount that has to be brought in. I want you to know that I am here to help and make this as swift and easy as possible. This is, once again, not to be overwhelming. Once we have that inspection set and the deposit is brought in, we're looking at being about a week into the deal. So after approximately 1 week, we likely will have gotten our inspection done. And again, there are 3 scenarios that can play out here. Scenario 1 is the inspection went well. You love the house and you are moving forward. Option 2 is there are not good things that came up in the inspection and you feel like that you can no longer move forward on purchasing that house. So you are backing out. And our contracts read that you can back out if something comes up in the inspection that is unsatisfactory. Scenario 3 or option 3 would be to once again open up a potential negotiation with the seller. Now, this is totally up for negotiation, and all 3 scenarios are totally on the table. But ultimately, it has to be decided if you feel comfortable enough or not to move forward on the house. Now, for this video, you are moving forward because I want to talk about what else comes in the process. After you decide that you are moving forward with the home after inspection, we get into weeks 2 and 3, which starts to get involved into the appraisal process. So your inspection went well. I then turn around to the lender and attorney and say, hey, the buyer's moving forward here. We need to order the appraisal along with the title search. The appraisal, once again, is the bank or person who's loaning the money. It's them coming out to verify that what you are paying for the property is fair. You're not paying $1 million for a $100,000 property. It would be too much risk for them to loan the money. The title search is also very important, and as to the job of the attorney. That attorney is doing the title search to make sure that there are no issues with title or liens on the property that would cause potential lawsuits down the road or cause you to take on potential debt that you were unaware of on the property. Now, I will say throughout the whole process, you are constantly in talks with the lender, doing lending files, getting information that they may be requesting for employment status or things of that nature. As we get into the 3rd and 4th week of the deal, we are hopefully hearing about the appraisal coming back supporting purchase price. We've gone over the scenarios of what happens if it does not appraise out. And we start to begin to line up your property insurance. So we know you're moving forward on the house. We know that things are appraising out. We know that title looks good. We now have to get your property insurance set for that property. Now, in most cases, if not all, a lender will make it a requirement for you to have insurance on the property that you are buying. Again, they do not want to take on the risk of potential massive damage should something catastrophic happen, and then you can't pay for that damage. That's why insurance is super important. So getting into the 4th week or so, we are probably getting near the mortgage contingency date. the date at which we are saying, hey, we will have commitment from our lender guaranteeing us those funds. So as we get into the final week, we will hear the golden words in our industry, which are clear to close, or CTC. This is the lender one final time giving the final approval that the money is not only approved to be given to you, but is ready to be released. And once you get that clear to close, you quite literally are clear to close. So that is fantastic news that we have gotten to this point in the transaction. A couple things that I do want to mention as you near closing date. You'll want to make sure that you are switching utilities over on that property. I don't want you to purchase a property to walk in day one and not have electricity. So it's important to make sure that before closing date, we are setting those things up with new accounts for yourself and starting them on the day that you actually purchase. Now, the last thing I will mention is that part of your closing costs, which I will get into shortly here in segment 3, actually pay for a future portion of your mortgage. So for example, let's say you purchase halfway through January and you close on January 15th. What will happen is your closing costs will pay forward the rest of January and February. So if you purchase in the middle of January, you do not owe a mortgage payment until March 1st. The same would be if you purchased on January 31st. You would technically get January 31st paid for in your closing, and then you would pay for February as well and still pay once again on March 1st. Now, if you close on February 1st, you would have basically 2 full months of closing costs that paid for your mortgage payments. So a closing on February 1st would entail a first mortgage payment being on April 1st. Super important to keep in mind. Again, you are paying for that time, but you're paying it at closing, so you get a little bit of a breather before your next mortgage payment. Oh, and I do just want to clarify that you cannot close on a weekend or a holiday. Now let's get into segment 3, talking about the costs associated with buying a home. Of course, there is the purchase price of the property, but what other expenses can you expect to incur? Now, I've tried to put these into 3 categories to best understand them. So, our first bucket is going to be down payment. This is the total amount of money that you are bringing down towards that purchase price. And again, as I stated earlier in this video, your initial deposit goes towards that down payment. Your next bucket of costs are what I call during the purchase costs. These are items such as inspection fees, potential appraisal fees that have to get paid prior to closing, potentially an insurance premium, paying your first year of insurance ahead of time if that lender is also requiring it. And of course, the joke of furniture if you are eager to order some stuff before closing. Our third bucket is closing costs, and this is what you will be paying at closing in addition to your down payment and all the other during purchase fees. So we are looking at closing costs that include things like your attorney fee, your title search fee, your lender fee, your prepaid taxes, your potential realtor fee, prepaid mortgage payments, and potentially insurance and appraisal fee if they were not paid during the purchase process. Again, there is no exact number on closing costs, but generally in our market, typically, we think of closing costs being about 3 to 4% of purchase price for a good rule of thumb. Now, if you are a cash buyer, great, you've avoided all of the lender fees, but otherwise, all other costs associated with a purchase still apply to you. So once again, being as educated as possible throughout the process is going to leave a positive and successful experience behind you. Now let's get into our final and fourth segment, which is the 5 things that you need to know throughout the process. Number 1 is going to be that the perfect home may not actually exist. When we are looking for homes in the market, I'm sure you have certain criteria that you're hoping that house has. Now, in many cases, I have a buyer that just can't quite find a house that fits every last checkbox, and that's okay. There are so many complexities to homes. So my advice for you on tip number one is if you have a list of, let's say, 10 items that are musts for you on a property, figure out the items that are changeable, meaning maybe they don't meet your criteria, but they can be changed, whether it's a cosmetic update or an improvement down the road. So I often tell buyers, find a house that meets 8 or 9 out of those 10 checklist items, and find the house that you can then check those last couple of items off to make it perfect after buying it. Tip number 2, understanding the term PITI. P-I-T-I. I've talked a lot about monthly payments in this video, and it's kind of a loose term. What exactly is the monthly payment? Well, that's what we are referring to, which is the PITI payment. Now, PITI stands for principal, interest, taxes, and insurance. Now, if you're buying a condo, you can also include condo fees in this PITI payment as your monthly payment. But the reason why this is so important to understand is that this is your true ownership cost. This is what we are referring to when myself or a lender says, hey, let's talk about your estimated monthly payments. After that, you're talking about what utilities you're paying on the house, what food you're buying, how much gas you're putting in your car. It's just important to understand that the PITI payment is truly what you are paying for ownership of that property. Tip number 3. Safe areas and school districts. At least in the state of Connecticut, I legally can't be technically commenting on what is a safe area and what is not. I also can't technically be talking about what schools are great and what schools are not. The reason I can't be talking about these things legally is because I could be considered steering, or that I'm pushing people towards a certain way. So what I will advise is 2 things. There are many great websites that allow you to check for the safety of an area that are fairly accurate, along with school ratings also. You won't ever hear me say, hey, super safe area, super dangerous area, or great school or not so great school. But you will hear me say, look, check the online data, see what the school ratings are. And in the case of a safe area, if you really want to hear it from the source, I actually advise you to call the non-emergency PD line of that town or municipality and quite honestly ask them what their history is with that area. They have an obligation to give you an honest answer. And I've had many clients do this and get successful feedback. Tip number 4. Have a strong team around you. This could literally be the difference between you getting a home that you love and not. So when purchasing a house, you have a realtor involved, you have a lender involved, you have an attorney involved, and an insurance agent in some cases that is also involved. I've been in the industry long enough to have made fantastic connections with great lenders, great attorneys, and great insurance agents. And this is so important to make sure that, once again, you have the strong team behind you to make sure that even if a curveball gets thrown at us during the deal, we have your back and you are safely covered with your money and your protection to make sure that your process gets corrected and continues in a smooth trajectory. And then finally, tip number 5, stay focused, be realistic, and be aggressive. If you are not focused on your purchase, or you take attention off of it, or you are not realistic, or you are not, in some cases, aggressive enough in this aggressive market, you will unfortunately have a difficult time. So make sure that when you are buying a house, you stay focused, you be realistic, and you be aggressive. So there we have it, the ultimate buyer's guide for buying a home. I genuinely hope that you learned something from this video, and I thank you so much for watching it. And if you watched all the way until the end, I applaud you. So please like and subscribe this if you found this video helpful. If you have any questions or comments, please drop them in the comments section below. And you can also connect with me on all social media platforms at Wesley Krombel Realtor, or learn more about me and my team at wesleykrombel.com. Thanks for watching, and see you on my next video.